Hi guys, welcome to this Money Control live stream. You're watching Morning Trade with me, Nandita Khemka. It's a Thursday morning. We are inching closer to the weekend, but a lot of cues to digest before that. GIFT Nifty hinting at a fresh record for the Nifty, so we'll be watching out for how the markets open today. And of course, lots of stocks in focus this morning. And as usual, we'll be getting all your stock-related queries answered by your experts on the show. So if you have any queries, send them in to us on our YouTube feed, and we will have them addressed. But before we move any further, let's take a look at the top headlines at this hour. Wall Street closes mixed on Wednesday following a hotter than expected inflation print. High petrol prices push US consumer prices up 0.6% in August. Investors remain divided on Fed's next move as core inflation sees an uptick for the first time in 6 months. Asian markets open higher with the GIFT Nifty, as I was mentioning, suggesting a positive start, but we'll have to watch out for if we hit a fresh record in today's session. Oil prices hold firm above the $92 per barrel mark as a surprise build-up in US crude inventories is offset by expectations of tight supply. Meanwhile, gold hits a multi-week low on a strong dollar and uncertainty over the Fed's next move. Among stocks in focus, Adani Group stocks in the spotlight today as reports suggest that they are in talks to refinance a $3.5 billion worth of debt, and Bombay Dyeing as it is selling its Worli land parcel at a whopping 5,200 crore rupees. Two key IPOs open for subscription today. FinTech player Zaggle will launch its 564 crore rupee IPO, while the Goldman Sachs-backed Samhi Hotels is set to kick off its offer, including a 1,200 crore rupee fresh issue. And Tesla is planning to source auto parts worth $1.7 to $1.9 billion this year, says Commerce Minister Piyush Goyal. The quantum of imports will be around double of what the EV maker imported from India last year. Well, on that note, let me first bring on board our technical expert for today. Joining me is Osho Krishan of Angel One. Good morning, Osho. Great to have you on the show. We did see the markets end above that 20,000 mark for the first time, and GIFT Nifty this morning indicating that we will be starting or hitting a fresh high as well. What are the kind of resistance levels or levels on the upside that you'll be watching out for on the index today?
Very good morning, Nandita. First of all, thank you for having me on the show. Well, now talking about the Nifty movement. So Nifty, we have seen very strong movement from the past 2 weeks. But as of now, the milestone of 20,000 has been breached. So the question rises that what is the next potential target? So as per derivative front, on immediate basis, call writers have shifted their positions from 20,100 to 20,200. So for immediate basis, 20,200 on spot levels is something that we can expect Nifty to have a very strong resistance. While on the downside, we have again witnessed a slightly upward movement in the support base. Previously, it was 19,800 to 19,900 was the range where we were having a lot of put writing that can be seen. But as of now, the put writing has been shifted towards the zone of 20,000 and 19,900. So that means overall, it had been an encouraging development for the bulls on the derivative front. And even on the technical front also, as we have headed to the uncharted territory, the undertone lies on the bullish front only. So we are expecting that any dip towards 20,000 in intraday should be auguring well for the bulls, and one should definitely try to add long positions if there will be any kind of correction of 20, 50 odd points on the spot levels. But looking at the overall performance or overall potential that as per the GIFT Nifty, so we are expecting that approximately we should open above 20,100 zone. So even in that case, one should patiently wait for some kind of correction or some kind of profit booking, and post that one should try to add long positions for today's setup.
All right, those are the levels to watch out for. And of course, it remains a buy on dips market, according to Osho. With that, Osho, hold your thought. We'll come back to you and discuss specific stocks. But let me also bring on board, joining us is market expert Prakash Diwan. Good morning, Mr. Diwan. Thanks a lot for joining in. I want to get in your thoughts on the mid and small cap end of the markets first, given the fact that we saw a very sharp correction come in day before yesterday. Do you think it's just a trailer of what's to come when it comes to the broader end of the markets? And would you say that this remains a buy on dips markets, even when it comes to some of these mid caps that have become overheated? Most of them have seen some around 100% or 200% kind of move. So how should one approach the overall market at the current juncture?
Good morning, Nandita. Happy to be on the show. I think the Tuesday flow of events was very clearly a possibility of what is possible to, what is likely to happen if things go bad. And remember, all that sell-off that happened was probably at the back of just half a reason or excuse or trigger, whatever you may call it. The reason was very simple. Small caps, micro caps, some of the mid caps, they were all in an overbought position. And, there are few good names, lots of liquidity from the retail participation levels, including some of the mutual fund money that comes into SIPs for these mid-cap, small-cap funds. All of that was changing just a few, select few stocks, and that's why they were overbought. So the texture of the market was very vulnerable, and it just needed a trigger to kind of see a sell-off. And my sense is it could happen again. Before, and it's healthy. A shakeout is always healthy. So answer your question whether there's still opportunity. Of course there are, but you have to be extremely selective, very bottom up. You can't bunch mid caps, small caps together in one segment and say everything's going to behave in the same way. But by and large, I think the opportunities are far bigger or more, favorable on the large cap side now. Especially the Nifty, if you see 20,000, it's a psychological mark. But even at an estimate of Nifty EPS of 1,030, 1,050, that's a broad consensus range. We are just trading at 20 times, FY24 expectations, which is really not, out of the, it's not like so out of a range that we are used to. In fact, the long-term average is 18 times P multiple. So, from that angle, we are not overbought on the Nifty side. And I see a lot of opportunities there, stocks which haven't participated and contributed to the Nifty rise. So there could be like banks, for example, some of the IT names could make a comeback. We've just seen very odd participation from some of the, power stocks, some of the mining stocks. But there's a huge list of banking, pharma, FMCG that's yet to kind of, contribute. So there is opportunity in the market for sure. You just have to be more selective than what you were because the momentum is going to be now dispersed into stock-specific activity.
Right. Mr. Diwan, you spoke about a lot of sectors, but I want to get your thoughts on the sugar pack. We have a bullish report coming in from DAM Capital. It's the latest brokerage because the entire view on this space is pretty much bullish. And DAM Capital has initiated, in fact, coverage on some of the stocks with a buy rating, good target prices coming in. And we also saw sugar prices hit a 6-year high recently, right? So things are going good for sugar companies. And the El Nino conditions will further hamper production going forward. So prices are likely to remain elevated. But, the government had also asked some of these sugar makers to furnish details of the quantity of sugar sold during May and August to, ensure that there is no hoarding ahead of festive season. Do you expect that there could be some bit of government intervention coming in, with respect to prices that could play spoil sport for some of these sugar companies? How is, this entire pack looking like for a 6 to 12 month perspective?
No, that's a very interesting question, Nandita. So the reason being, sugar all this while has been a sector that has been supported completely by the government in terms of MSPs, in terms of farm gate prices, in terms of ethanol addition to the general usage of fuel. But now we've come to a stage where the global market has become far more benign. Okay, because of the crop shortage in Brazil, global rates for sugar are extremely high. In fact, one of the highest in the last many years. So there is an arbitrage that every sugar producer would be eyeing at. But if everything were to get exported to take advantage of this higher price overseas, you will end up having a shortage in the domestic market. And not just festive season, you also have an election coming next year. And sugar is a little bit of a sensitive, consumption item. And I don't think the government is going to let that happen. So the intervention can happen if prices continue to rise even in the domestic market. But my sense is if they were to allow a slightly higher export quota, it might not hamper the same. We'll have to see the September crushing season numbers to really make an assessment of that. But what's changed for sugar is that for the first time, sugar prices are giving you the comfort of not losing on producing sugar. Otherwise, all sugar mills were losing money on actual sugar, but making money on ethanol and the byproduct of power. Now, if sugar were to start making money, a lot of that money will get reinvested into the businesses. I know a lot of sugar mills, maybe in the unlisted space in Maharashtra and Karnataka, who I speak to regularly, and their intent is to increase ethanol capacity. So everybody is looking at somebody with 200 kiloliters per day is moving 500. Given the fact that ethanol has a clear, visible trajectory for growth, you know that, Nandita. I mean, the way the Ministry of Road Transport is talking about incremental addition of ethanol, there is very clear demand. Sugar might have its ups and downs, but ethanol seems to be a much more favorable play. And I would play the sugar sector by completely getting into a company that benefits from this expansion, and that's Praj Industries. I mean, even today it's available at just close to about 10,000 crores market cap, has very decent sales. Look at the kind of margins they've started clocking. They never had pricing power, but today, given the demand, they have a backlog of equipment supply. So things have changed for a lot of these companies. And Praj is also getting into compressed gas fuel, which is something which, thanks to Mr. Ambani's announcement during the recent AGM, where he said he's going to be setting up more than 100 plants. Everybody is going to get into that space. And of course, it's a low technology business, but for Praj, that's another optionality that kind of starts working. So there are lots in favor of that rather than relying on any sugar company. But I haven't cited this report from DAM Capital, but I'm sure the likes of EID Parry, if you were to ride on, will still kind of hold you in good stead.
Right, Mr. Diwan, we are a little short on time, but I want to still ask you one question on the footwear space, given the fact that we had a Citi report on Bata yesterday. They see a potential 23% downside on the stock. Of course, given the fact that performance has been subdued, they have lost market share to unorganized players. Same happened with Relaxo as well. Going forward, would you say that this is one space that investors should avoid now?
I don't think so, Nandita. And I'll make it very brief. Bata has had this ups and downs in its strategies. They keep on trying newer things. They got a little bit much more on the higher end of the price points when they started getting some top-notch Bollywood celebrities as models to endorse their products and all. So they had a very, very clear reflection in sales. And then they again lost a little bit of that ground. What's happening in that space is that consumption pattern of footwear is moving more towards the premium side. So the likes, if you see numbers from the likes of Metro and all, very clearly that indicates that. So, Khadem, a Relaxo, a Bata will end up having to kind of move up the value chain if they really want to do that. And I'm sure Bata is a brilliant business, multinational experience, and they will be able to revive themselves. So in fact, it could be an opportunity if people feel Bata is out of the reckoning. That might end up giving you that stock at lower valuations. And of course, you'll have to be patient. It's not a trading stock for sure. But from the long term, it has all the ingredients to revive itself and deliver.
All right, that's the view on the footwear space. Of course, Bata looking interesting with a long-term perspective. With that, Mr. Diwan, thanks a lot for taking out time and joining in and sharing your thoughts with us. It was a pleasure speaking to you today.
Thank you.
Thank you. With that, let's go back to Osho and speak about the stock of the day, of course. I mean, no points for guessing. It's Bombay Dyeing, given the fact that it will be selling its Worli land parcel for a whopping 5,200 crore rupees. It'll be the largest deal, real estate deal for, in Mumbai by value. And, the company will be getting somewhere around 4,625 crore rupees as, in the first tranche and in the rest in the second phase. And of course, this part of this, the proceeds will be used to retire debt as well. Bombay Dyeing, if you look at the stock, yesterday it was up somewhere around 7% or thereabouts, flirting with 52-week highs. Would you say that this bit of news was priced in? Is the up move already over for the stock, or do you think it could see a further boost and perhaps touch its 52-week high and even go beyond that? I also want to bring to your attention that we have a query coming in from Vivek Kurup on this stock and wants to know your thoughts on Bombay Dyeing for the next 1 week or so. What would you say?
See, overall, in this financial year, there has been a very decent up move in Bombay Dyeing. So as all the mid-cap and small-cap companies have seen a very decent up move, same way Bombay Dyeing has also seen a very strong up move in this financial year. But now coming to the news part, on the basis of sentimental movement, there can be some kind of a strong movement that can be seen. And also it's a very big news also. So one can expect the upside in this counter to have continue on the higher end. But on technical basis, if we will be telling about the supports, then a strong support lies around the zone of 115 to 120. So in future also, if there will be any kind of correction, this counter has seen a very strong rebound. So 120, 115 should be cushioning the price movement on the downside. But looking at the overall momentum, followed by the positive news, one can expect 160 zone to get tested in the very near future. And even it has the potential to move beyond 160 towards 180 should be the next potential target in Bombay Dyeing. So overall, the structure looks very positive, and one should definitely try to accumulate this counter currently at either at the current levels, or in future if there will be any kind of dip towards 120, that should be auguring very well for the buyers in this counter.
All right, that's the view on Bombay Dyeing then. But let me talk about PSU Banks. I mean, this index was up somewhere around 4%. You had a lot of these, stocks that were gaining anywhere between 6 to 10% or thereabouts. There's a query coming in from Shyam Gore and wants to know your thoughts on Bank of Maharashtra in particular. Stock was up nearly 5% yesterday. Would you say that this is the beginning of another leg of up move when it comes to some of these PSU banks?
The overall PSU banks are looking very positive as of now. Majority of the counters are having a very strong pattern of higher highs, higher lows. So overall PSU structure still has the potential on the higher end to move on the upfront. Coming back to the question on the Bank of Maharashtra has been hovering with the same cycle, but as of now, it is having a very strong overweight parameters near the zone of 46 to 48. So from there onwards, one can expect some kind of cool off or consolidation in this counter. But from here onwards also, we are having approximately 3 to 4 rupees of up movement, which is pending in this counter. So on the downside, 38 is the zone where we can witness a very strong support. And on the higher end, on immediate basis, one can expect 46 to 48 seen as a very strong resistance for this counter.
All right, that's the view on, Bank of Maharashtra then. But let me ask you about Jindal Steel. This stock hasn't really done all that well over the last 5 sessions, Osho. We have a query coming in on this stock from Pankaj Kajalia. Wants to know your thoughts. With a short-term perspective, how would you advise investors to trade into this?
So this counter has been in a very primary uptrend. So looking at the overall technical parameters, it is still having a lot of potential to go towards the zone of 700, 750 from medium-term perspective. But looking at the recent rally that it has witnessed from the zone of 500 towards 700, one can expect some kind of cool off or some kind of consolidation before the next leg of rally. So in short term, there can be some kind of correction because 700 being a very strong psychological resistance. So from here onwards, 700 could be acting as the first resistance zone. But on the downside, we are having a very strong support near 670. So from short-term perspective, the counter might go into consolidation, but from medium-term perspective, one can definitely look for the targets of nearly 750 in the coming future.
All right, that's the view on JSPL then. But let's talk about a tech Mahindra. We have a query coming in from Tarun Singh, wants to know your thoughts on this. IT Pack has done fairly well. It has been holding up. How does tech Mahindra look to you now, Osho?
See, overall, the IT large cap counters have started moving on the higher end because in last month, we have seen mid cap IT companies were having a very strong rally. And this month, we are witnessing that the large cap are also contributing to the rally. So looking at the charts of TechM, one can expect the upside to continue towards the zone of 1350 on immediate basis. 1320 to 1315 should be the immediate resistance zone. And on the downside, there is a very strong support placed around the zone of 1200. So from here onwards, one can expect the gradual up move to continue because looking at the technical parameters, it is continuing the cycle of higher highs, higher lows. So definitely it should follow the same patterns in the coming future also. So for which the strong support lies around 1200 and on the higher end, 1320 to 1350 should be acting as the stiff resistance in the coming future.
All right. Hope that answers your query on Tech Mahindra. But let's take up a query on Cochin Shipyard. We keep getting queries on railway and shipbuilding stocks. They have run up so much. There are intermittent, days of some bit of correction, but they are few and far between. So we have a query from Som, wants to know if it's the right time to invest in a Cochin Shipyard. If you look at the stock, over the last 1 month, it has gained nearly 60%. Would you still advise investors to buy on dips now?
Overall, looking at the technical perspective, the counter is already in the very strong overbought position. So from here onwards, the risk and reward is definitely not in the favor of the buyers. So for those who are still having it, they should definitely keep the counter. But one who wants to have a very fresh position in this counter, then they should wait for some kind of correction that is again towards the zone of 900 to 950. So if there will be any correction towards 900, 950 zone, then only one should try to accumulate this counter. Else, one should wait for the levels of 1100 to get sustainably breached on the higher levels. Then only one can even look for fresh addition in this counter. So overall, looking at the parameters, technical parameters, the counter is definitely looking overbought, and one should patiently wait for some decent correction in this counter.
All right, that's the view on Cochin Shipyard. But last query coming in on Page Industries from Hemant, wants to know your views on this stock. It has been in a downtrend, Osho. But with a 12-month perspective, how would you view this stock now on the charts?
Overall, looking at the overall technical parameters, the counter is still in the corrective phase. But the positive development that can be seen in the recent duration, that it is forming a very strong technical pattern. And even it is sustaining above the 200-day SMA after a very long time. So that is a very positive development in this counter. So until and unless it breaches below the zone of 39,000 zone, then again there will be some kind of deep correction in this counter. But till the time it is sustaining the zone of 39,000, one should definitely try to accumulate this counter. And on the higher end, one can expect on immediate basis 42,000 to 42,500 should be acting as the first resistance, breaching which this counter has the potential to go towards 45,000 zone.
All right, hope that answers your query on Page Industries. But with that, we've come to the end of the query segment. But Osho, any recommendations for our viewers this morning?
Yes, definitely. Looking at the overall market scenario, we are very much bullish on the BFSI sector. So banking and finance both are looking very positive. So the first recommendation will be from the banking space. The first counter is ICICI Bank. It is hovering near the lifetime high zone, and we are expecting that it should breach the lifetime high zone in the coming 1 to 2 trading sessions. So one should definitely try to gauge the momentum, try to accumulate this counter at the current market price. 988 to 990 is the zone on the spot levels. On the downside, 972 should be kept as the stop loss for short-term traders for immediate upside of 1020. The second counter is Bajaj Finance. Bajaj Finance is also looking very positive, coming out of the consolidation zone. So one should try to buy this counter at the current price. 74.70 to 74.75 is the buying zone. On the downside, 73.20 should be kept as the stop loss. And on the higher end, one should expect the counter to test 77.40, 77.80 in the near future.
All right, ICICI Bank and Bajaj Finance, 2 recommendations coming in from Osho this morning. With that, Osho, thanks a lot for taking out time and joining in this morning and sharing your thoughts with us. It was a pleasure speaking to you this morning.
Thank you so much.
Well, with that, we've come to the end of this edition of Morning Trade. But just a reminder for our viewers, 2 new IPOs opening today, Samhi Hotels as well as Zaggle. So, you can log on to our website, moneycontrol.com, and check out what experts have to say on whether or not these IPOs are a subscribe or an avoid, and what the companies do and how much, what their financials look like. But with that, a wrap on this edition of the show. Of course, from me and the entire team, thanks a lot for tuning in. Stay tuned. Coming up next is Opening Bell.